Welcome to the Eitel Insights podcast. My name's Andy Park, and we've had a lot of requests from the Eitel Insights community asking about various market conditions and where they're going. So Dane, can you talk a little bit about Eitel Insights and what it does and what brought us here today?
Sure, I'd be happy to. Well, Andy, thanks for joining me with this podcast here. So how Eitel Insights came about is real estate forecasting and analytics really haven't been a predominant thing that has held true with any market right across Canada. And we noticed kind of a hole in the market of any expertise as to saying where a market is going. A lot of people will mention where a market has been, and they say your crystal ball is as good as mine as far as where the market's going. So we did an ardent research, some really serious studies, and came up with a way to interpret analytical information. So our flagship market is the Vancouver real estate market. I have been a realtor here for the past 10 years, but this project came to life probably about 3 years ago when there was real questions, how high can this market go? And we're proud to say that we were one of the very first analytical companies to actually call the top. We were published in 2017 saying the detached market would not exceed higher than the price of May of 2017, which was 1.830 million. And subsequently, we've been absolutely correct. The market has definitely peaked, and we're seeing it starting to go back into previously established prices, previously established ranges. And we're going to continue to see a downtrend pattern as it's basically laid out in the charts that we will make available to our clients.
Great. And since we're jumping right into it, let's talk a little bit about Vancouver. And, up until a couple years ago, conventional wisdom stated that Vancouver was essentially untouchable. It was a hotbed for both foreign and domestic investors. So what got us here today? Why the sudden flux in the market, and why is there so much volatility?
Yeah, that's a loaded question, so I'll try and be somewhat precise and concise in my answer. So let's first look at the detached market, because that is the market that moves the overall macro industry here. So basically, we had a selling range that occurred from 2011 to 2013. Now, what I mean by a selling range is that prices no longer exceed. They're not in a growth phase. They're actually coming back and testing out a selling range. Now, why that's important is because during the 2008-2009 recession, Canada as a whole was hit quite hard, but not in the dramatic effects as other places in the world. Our lending quality standards were very sophisticated and high, so our default or delinquency amounts was not even close to the States during that period of time. Not to mention Vancouver specifically had the Olympics coming in 2010. So there was a lot of built-in construction that couldn't stop, and that really held the water in the 2008-2009 recession. Yes, we did dip very quickly in prices. There was a 21% decrease and then a 19% snapback in the year after. So that is one of the reasons why the world said Vancouver is a great place to invest. So what we saw was basically from third, fourth quarter of 2014, a rapid increase. So call it first quarter of 2015, we broke what was that selling range. It seemed like the previous high was 1.225, and we subsequently eclipsed that, and we rocketed all the way up to 1.830. The initial peak in the detached market was there in 2016. We saw a second top and subsequently a triple top, which technical analysts from the stock market might be familiar with. And that's what we kind of saw as definitely a signal that the market was headed lower. There was a lot of other repercussions that I'm sure we'll get into here as we go, but on its own volition, the Vancouver property had peaked and it was subsequent for a drop-off. We've done studies for these areas back to the 70s and some areas 60s when the data is available. And every single market is technically predictable, and they all do run through a real estate cycle. Now, a real estate cycle means that there's a growth cycle, subsequently a questioning phase, and then, of course, a bottom. We retest the former tops, and if it goes through another increase in price, then we're ultimately in another growth phase again. Water can't run uphill the whole time. However, if it is propelled, it can do so. So until it finds another valley, and then it'll eventually start to trough out again, and then water rises. Vancouver, long term, is a very, very desirable area to live across Canada. So this place will bounce back, but what we're saying is in the short term and longer term future over the next foreseeable couple of years, Vancouver prices will continue to decline.
Okay, so looking at it from several perspectives, if I'm, for example, a prospective first-time buyer, what am I looking at? Should I hold off? If I have cash on hand, should I invest? And what if I'm a seller? Do I run for the hills? Do I unload my property now?
Real estate's really it's very fickle for every individual, right? So you have the investor mentality, and then you have the home ownership mentality. So let's try and deal with each one on their own. So kind of the quicker answer would be for the sellers. Unfortunately, if you're looking to get the highest dollar, the sooner is the better. Now, to get the best dollar, it's actually a tricky time right now. It's the answer is to not ask for the top dollar. It's ask for a realistic dollar, and that's truly where we help out sellers and realtors the greatest. We offer our reports for $250. We make them available right across Greater Vancouver, right across Canada for that matter. But individually, if you're wondering what's happened to my detached property in New Westminster, we'll tell you what it was worth at the peak and probably what it's worth at now, which makes your realistic outlook that much more comfortable when you actually see these offers start to come in. You won't be dealing with the lowball offers because you are being realistic with your offering of a property to the market for a fair trade and price. So there is some advantages to this place. Now, for buyers specifically, the unfortunate case is that those advantages have kind of been eroded due to a lot of overarching government implications. Originally, we had a foreign buyers tax that was introduced by the Liberal government just before they were run out of town, and the NDP subsequently took over here. That foreign buyers tax really didn't have any impact analytically to the market. Yes, the prices did drop dramatically, but that was only for about a quarter or so. So the impact that the government thinks that it has in a private market really isn't the place that it doesn't have the impact that it believes that it does. So when they introduced that, the lawyers literally within a week or two had a legal way around that foreign buyers tax. Why foreign buyers aren't purchasing anymore is because we're simply not going up in price. We're actually going down in price. So if you think about it as an investment opportunity, Vancouver isn't that opportunity which it has been known for, especially since the 2008-2009 quote-unquote recession here, which we didn't really experience. So it was kind of seen as a safe haven. That's not what we're coming up to. This isn't going to be a safe time. We're anticipating between a 23 and a 33% price drop from the peak. Now, what does that mean for the seller? Well, if you could sell your property at the peak market and it was worth $1.83 million, by 2021 your property will be either worth $1.4 million or on the outset, on the real negative side, 1.225. Now, that's a significant drop in equity. The unfortunate thing for the buyers that we were alluding to here, where yes, that's a huge drop in equity, their buying power has been eroded as well. There was the national stress test that was employed by the Trudeau government, where basically it kind of says we don't trust you with your own money, unfortunately, because it didn't. And it happened at the wrong time. Both Toronto and Vancouver were peaking out on their own volition, as we've said here earlier in this podcast. However, government likes to see that they're doing something to affect this. So they put a stress test in. Now let's go back to your previous example of a first-time buyer. Let's say they were buying the average price condo. The average price condo in 2018 was $750,000. Okay, so let's just say that you could barely afford that. You were trying to get that, and you qualified for maybe 730, something to that effect. When the stress test came in, your effective buying power was reduced from 100 or 750,000. You lost $150,000 buying power, bringing you down to 600. The current real estate prices for the condo market is 650,000. So you're still $50,000 away. However, property owners have seen a $100,000 loss already, and that doesn't justify anybody jumping into the market to buy. So that's kind of why I believe this to be more of a misnomer about making it more affordable for people. Really, it's just hurt your affordability because your 100% buying power has now been reduced down to 80%. So you're really going to have to wait for this market to completely bottom. For the condo market, we believe the market bottom will be roughly around $525,000 for Greater Vancouver on an average sale price. We believe that'll happen probably 2022. There will be some pretty less than stellar events that will be transpiring in the meantime. Foreclosures will definitely be on the uptick there in 2020, 2021, especially in 2021. And a lot of the pre-sales do come online and actually are starting to complete in 2021. investors, and depending on what the down payment was, with a realization of a 30% loss, might not be willing to stick in and actually complete on that property. So you might see some prospective buyers walk away. And remember, when there was the investors that everybody was complaining about coming to Vancouver, they weren't just buying a single unit. They were buying 6, 10, 8, those kinds of numbers, and that was the frustration. Well, those guys aren't going to be around anymore to even complete on those. So those will be available to the market likely in 2022. However, we do encourage you to take advantage of that opportunity, because historically, when there's a decrease in price, that's when everybody waits for the bottom to continue to get lower. Vancouver does have a bottom that will definitely show up. And if you miss this boat, given the stress tests and given the other overarching government interventions, it might be tough to get back into Greater Vancouver as we go forward. So there are some advantageous times coming up for basically both sides of the market. I know it's not advantageous to hear that the prices are going down. However, you wouldn't have heard that really anywhere else. Nobody's offering this kind of insights. So your first loss is your best loss if you're a seller. If you're a buyer and you got a 10-year outlook and you really found your perfect property, go ahead, pull the trigger. If you're a speculator, there's a lot of time to wait, especially for Greater Vancouver. There is going to be a fantastic opportunity coming up. Whenever there's chaos, there is opportunity. Chaos will be coming to the Greater Vancouver market. Now, for the average buyer that can just start to afford, or maybe can afford here over the next few months, it's an interesting kind of dichotomy that you might be in. When real estate is going up in Greater Vancouver, so do usual household incomes. We're not seeing that effect anymore. So construction will eventually start to continually go down. The overall market in Vancouver is not going to be ripe. So if your qualification standards, and you can qualify for a mortgage today, it might be a good idea if you can be honest with yourself and say, you know what, maybe 2 years down the road, my income qualification won't be as great as it is today because I'm in construction and it might not be the steady work that there has been. So just have some realization if that's the case, but you know you can cover your mortgages, or your mortgage between you and your partner, whoever's going in and purchasing this property. It might not be the worst idea to go ahead and purchase today, even though prices haven't bottomed, because they're not at their peak. So there has been roughly $100,000 equity drop in the condo market. If that's enough for you to enter the market, please do so, because long term, the growth will be there. If you're the speculator, there's greener pastures on the other, or upcoming, I should say.
Okay, so it seems like opportunity abounds, even though the market isn't doing what it currently is. I think Winston Churchill once said, "Never waste a good crisis."
He's a smart man.
Yeah. Just for the layperson like myself, when you say the condo market is going from $650 down to $525, that's for a one-bedroom, is that correct?
This is actually just the average sale price. Okay, so that basically encompasses the whole Greater Vancouver condo market. So that's Burnaby, New Westminster, downtown, 1 bedrooms, 2 bedrooms, 3 bedrooms, the average price. So the whole total market. And now, of course, in Burnaby, the prices are a bit different. New West, the prices are a bit different. And that's where our client base really finds the value. For $250, you'll get an individual condo detailed report, not just with our technical analysis of where the prices are heading. We do days on market study to show why prices are heading that way. And almost the most important study that we offer is the supply-demand study. There is no doubt that with a shortage of supply, that was why the demand kept running up. When there's only one purse left, every person wants that purse for their wife or for themselves. Now we're starting to see more inventory show up, and the demand is definitely starting to wane due to the stress tests, yes, but also just due to the natural factor of real estate here in Greater Vancouver that, once again, water doesn't run uphill the whole time.
Mm-hmm. Great. And we've spoken a little bit about the individual jurisdictions within the GVRD, which is the Greater Vancouver Regional District. What else do you do? Do you go into other parts of Canada? Do you do North America? Or? Yeah,
we were actually on the Business in Vancouver podcast. I believe it was in early January. We did disseminate some of our more national thoughts, I guess. I'll quickly just kind of give an update on all three of them. So let's deal with kind of the easiest market, I guess, Halifax and Dartmouth. So there was a divergent trend. A divergent trend in technical speak is basically the higher highs no longer exist, but the lower lows no longer exist. So you're basically coming towards a sideways triangle in the pricing action. When that happens, there has to be a clear winner. There's no $10,000 or $20,000 winner. So for Halifax, the average sale price in February was $301,000. We prescribed or analyzed that this market was ready for a bump in pricing and would actually continue to go or will enter into a growth phase, and then that will continue for the years to come. We saw in March an increase of over 10%. The prices went from 301 up to 339. So that's definitely a clear winner. The bulls have Halifax and Dartmouth. It's not too late. This market will continue to be in a growth trend, and then you take your supply demand and your other metrics, and that makes sense. One of our more, I guess, controversial calls would be Fort McMurray. Now that area has just been lambasted with basically the worst news you could have. They seem to be Job from the Bible. So the oil patch dried up, the oil prices started to go lower, and then there was a fire. I mean, a fire throughout the whole city that really had an impact on the town. I mean, undoubtedly. So prices were decreasing roughly about $100,000 a year. They went from $650 all the way down. We're starting to see a base now in that pricing. That's what we prescribed and analyzed in January. We're continuing to see that play out. And now we're actually seeing a government switch in Alberta, which should help Fort McMurray over the long-term future for their prices. So, and that really goes against the analysts or the economic advisors. Even in January and probably even up until today, they thought Fort McMurray was done. It was never coming back. It was maybe even going lower. We look at data, the similar data as maybe other analysts. We interpret it completely differently, and truthfully, we've always been right. So it's kind of like equating economists or other analysts to polling. Polling used to work for political campaigns, and you could pretty much judge who was going to win by polling. That doesn't seem to be the case anymore. And truthfully, it hasn't been the case in real estate for a while. If you look at a lot of the calls, they might have been right, but it was with a very vague degree of correctness. They said the market would do well, the market would do poor, the market would continue. Well, what does that really mean? So that's where we think that we're offering real tangible value here. We're showing you prices, we're showing you dates and times to look forward to, and then we offer actionable intelligence through our analytical interpretation. So that's dealing with Halifax and Fort McMurray. The one that we're still kind of waiting on, as probably most of Canadians, other than the ones living in Vancouver, would be Toronto. We're still believing that market is in for a significant downfall. That market had peaked in April of 2017 with the aggregate average sale price of $920,000. Now, aggregate market would mean your townhouse, your condos, and your detached market all rolled up into one. So really the overarching theme of Greater Toronto. So once again, that peaked at $920 in April of 2017. Currently, we're not near those prices. In October of 2018, we saw the prices reach $807. Since then, we haven't seen any new highs. That means that the continually prices are actually starting to erode. Other economists have seen this basic last year as stability. We're saying this is as your last gasp for the Toronto market, technically speaking. We're expecting in the next quarter, 2 quarters at the outset, to see a significant decrease. The total correction we're expecting in Greater Toronto area from the 920 mark will bring you down to roughly 610,000, back to December of 2015 prices, and a total percentage loss of roughly 33%. And once again, I mean, Toronto, it's a great market. It will come back. We're by no means saying that these markets that are currently down are going to be here forever. However, they are going to be here for the short-term to longer-term future, depending on your definition of short-term and long-term. Definitely in the next couple of years, you're going to see equity and prices on the decrease.
Mm-hmm. That's a very comprehensive overview of what's happening in the major markets in Canada. Now, Dane, we're almost out of time, but one thing that I was curious about, excuse me, is it seems like you're applying tried and true techniques in the stock market to real estate, and you're applying the technical analyses that have been done there. So why is this so effective for real estate, and why haven't people done this before? There doesn't seem to really be precedents here. So can you talk a little bit about that?
Yeah, no, for sure. There isn't too many precedents. There has been one that was brought to my attention. I didn't know about it before we started this study at the beginning. But out of the Columbia University back in the 90s, there was a real estate market study on the New York market that apparently proved out as well. We've never actually seen the study or any of that, but just kind of colloquial, we've heard that this study was done. Why this works so well in real estate and actually maybe doesn't work so well in the stock market as it used to, it works best as a psychological indicator of an overarching market. Now, that works best when it's unseen. So nobody really knew that these psychological barriers or boundaries existed in Greater Vancouver or in real estate right across Canada or real estate right across the world, for that matter. We've diagnosed them and come up with ardent studies and great information that have come from those studies. Every move in the stock market is technically predictable. Is it technically predictable on a minute-by-minute basis? No. The big moves, that's where you really see your technical indicators show up in the stock market and for sure in the financial sector as well. Now, your day-to-day trading in the stock market, you got your bulls and your bears. So even if you see one technical move transpiring, you and I can see it in a very different way, where you see this as it's going to break the ceiling upcoming in the next 20 minutes in the stock market. I say, no, that ceiling is going to hold in the next 20 minutes. So we're really betting against each other, and then the market decides. So it's whoever interprets it that way really wins the bet in the stock market. In the real estate game, you're really kind of buying for long-term wealth accumulation or for personal reasons. You're not really trading the market for a gain or a loss. However, in Vancouver, people have started to treat real estate as an investment tool. And even in areas, suburban areas, where it's not seen as an investment tool, there is a psychological value that people put on their properties, and that does run prevalent through the data. And that's basically what we do interpret. Once again, we take prices as the kind of main theme, but the supply-demand factors, the amount of inventory, the days on market that they're staying really do lead us to offer information as to where the market's going with the time that passes. We continue to prove correct. We don't say that in a braggadocious way, but we do say that in a factual way. Our articles really don't change ever from month to month, where some other economists, analysts do. They say, you know what, this month Vancouver's good. Well, it's a spring market, so it's going to be okay. Well, now it's summer, so it's going to, no, I mean, there is an overall trend. Is it higher lows? Is it lower highs? Which way is the market going over the next couple of years, over the next couple of months, rather than where's it been? And where has it been has been answered by everybody. Where is it going has been answered by really no one until Eitel Insights.
All right, and with that, let's wrap this thing up. This is going to be a regular podcast. And Dane, where can people find you? Where can people find more about Eitel Insights?
Absolutely. So we do have the website. It's eitelinsights.com. We are going to be putting up some comment sections where you can get in touch with us and maybe ask us a few questions that might be featured here on future podcasts. We actually do have a great list of realtors as well. So if you're curious about your personal circumstance or your personal situation with the condo, the detached house, whatever it may be, please get in touch with us. I will actually get in touch with you. We'll set up a meeting. We'll set up what your goals should be. Once I meet with you, hear from you, see what your aspirations are, I'll hook you up with one of our realtors that is in tune with the market, in tune with our data, and that way it should be a better match for you to find some satisfaction in this chaotic market that's chaotic now and about to become bedlam, if you will.
Great. And with that, this is the first ever Eitel Insights podcast. Going to have a lot of fun. We'll be discussing the Vancouver real estate market, general technical analyses, and everything in between. So long, everyone. Take care. Thanks for joining us, and we'll see you on the next one.
Andy, can't wait for it, buddy.
All right.